month's market update. I'm joined today by KC Lowe, Senior Consultant and member of Frontier Advisors Capital Markets and Asset Allocation Team. Hi there, KC.
Wayne?
Well, before we get into the year ahead, it might be useful to just get an understanding of how we got to where we are at the moment. So can you give us a quick summary of some of the key points from 2022 and what investors have been thinking and dealing with for last year?
Happy New Year, Wayne.
Thank you.
So if I had to summarize what happened over 2022, so the two things I'll cover is interest rates and inflation. So over the course of last year, we saw inflation skyrocket to levels not seen since probably the late 80s. So it's been a very long time since we've seen inflation at these high levels. And it's been driven by a number of things. So we've had the war in Ukraine. We've had ongoing issues with supply chain bottlenecks. And also that we have issues with government stimulus from the pandemic flowing through. So all those factors led to inflation skyrocketing. And as a result of that, central banks had to increase interest rates quite rapidly to respond to the higher inflation. And because of that higher interest rate, the interest rate or debt burden for businesses and households have increased dramatically as well. And really the full extent of that impact hasn't really been felt yet. So we expect more of that to flow through over the course of 2023. So that's had an impact, but also because of the higher cash rate, it has reduced the attractiveness of other asset classes. So that has flowed through the financial markets because of the difficult last year. Global equities performed negatively, pretty big negative.
Yes.
But Australian equities, which also did negative, which also had negative performance, but did better than global equities there. And if we look at government bonds, for example, which typically is considered a safe investment, but because of how quickly interest rates increase, government bonds also delivered a negative return last year. But one positive though is that the Australian dollar did fall over the course of last year. And what that meant is that investors with foreign investments saw the value of these foreign investments increase, or at least it offset part of that negative performance from those investments.
Always good to have some silver linings on the clouds. You mentioned interest rates and central banks. Still quite a lot of activity happening there. Can you talk us through some of the more recent developments in that space?
So in December, central banks continued the trend of increasing interest rates. When you look at the US Federal Reserve, the Bank of England, the European Central Bank, they all increased their interest rates by 0.5% in December. The Reserve Bank of Australia also increased interest rates, but not as much as the others. So we only increased it by 0.25%. And one other central bank, the Bank of Japan, which have been quite different from other central banks in terms of keeping their interest rates very low, they did tweak their policy a bit. Effectively, they allowed their government bonds to trade a bit higher in its bond yield. So there's a bit of a change there as well.
Okay, so looking forward now, what are some of the key things that you're thinking about as we move into 2023?
So the big theme that was discussed last year, and it's only gone louder this year, is the risk of recession. We looked at quite a number of models, but one of the models we focus on is the US Federal Reserve recession model. And based on this particular model, the risk or the probability of a recession is at around 50% for this year for the US. So it looks like this year will be another difficult year.
So if we do see economies moving into recession, what are some of the things that investors should be thinking about then?
Yeah, that's a good question, Wayne. So the real economy and the financial markets aren't always linked, or they don't always move in the same direction, because the financial market is meant to be forward-looking. So one of the key things to consider is that if everyone is talking about a recession or the risk of a recession, then it is possible that the market has already priced in this risk, particularly because everyone's talking about it. And that over the course of last year, we already saw financial markets fall quite dramatically. So if we do get a recession this year, it may not necessarily mean that we see financial markets perform as badly as we saw last year.
Well, one thing's for sure, KC, 2023 will be an interesting year. Thanks for taking us through that. And thanks for watching this month's market.